Hello, this is Evan here from the Trade Risk on Wednesday, October 6th, 2021. We are intraday right now, and this is our weekly swing trade ideas where we typically run through a variety of technical stock setups, screens, and scans. But in this week's edition, we are going to be spending some time on the major averages, the major ETFs here for the US markets, because they are in play, they have been volatile, and all traders, I think, at this point are kind of staring at the markets, trying to get a sense of where we're headed and whether or not the market can kind of pause here. So we're going to spend some time just running through the major averages, and then we're going to maybe finish just scanning through a couple of different ideas on individual stocks. So as always, these videos are sponsored by our partners over at Investors Business Daily. All of our long ideas, those individual stocks that we do look at, we like to curate them based off of IBD's stock lists because they do back-end curation, fundamental screening criteria, and rating, and they are a good quality bunch of stocks to trade. And so if you want to get access to those stock lists, you can get a link in the description of this video. So let's talk about the S&P 500. We've been on top of this in our past couple of market analysis videos, but we want to sort of frame up the recent action here. And if we look here at the SPY ETF, we can see that we are still in pullback mode. We have fallen about 6%, just over 6% from the all-time highs to the pullback lows of just 2 days ago. We've got about a 6% correction here from highs, and this is, in fact, the highest or the biggest in magnitude pullback we've seen all year long. So it's been a pretty good year. If we're in October and 6% pullback is the largest we've seen, it's been a pretty good year. And so when we look more closely at this most immediate action here, you can see that the market is definitely sort of throwing down the battleground area here between, call it, 435 and 428, 427. This is basically the zone where we've really seen kind of the emotions pick up, the ranges start to overlap, and the market really kind of just trying to figure out right now who's in control. And so when we look at, obviously the way we started this week was pretty horrendous with this move to and a close at new pullback lows here. Monday was a rough way to start the week, down over 1% in the S&P 500. Then we had this wonderful kind of pop up on Tuesday. We had turnaround Tuesday in motion. We had some sectors leading, and we saw stocks just generally close fairly constructive. And so the hope was today on Wednesday, we come in with some follow through to the upside, and here we go, bulls getting their traction to the upside. But we didn't get that. We got a rug pull on this morning's open where we essentially started the session with this gap lower here and a loss of yesterday's progress. And what has developed so far intraday is this green candle here, and it's green because the candle is colored based on close versus open. But this is basically showing that so far, even though we had this rough open where we once again were back testing lows, buyers have been stepping in here so far and driving us off of those lows. Now this video is being recorded while the session's still open. We've got a couple of hours left in the market day, so this candle can obviously look much different if you're watching this after the close. But as I see it here, and as I look in this very micro sort of event of today's intraday action, this rally so far is constructive to see. It is good to see the bulls once again stepping in and defending these lows down here around 428. And if we can close strongly where we are right now or higher, then this gives us at least more short-term confidence that buyers are, again, stepping in around this 427, 428 zone. And so for me, keeping things very simple here and at a high level, I want to see these lows defended going forward. I want to see a strong close today. I want to see these lows defended. And if I were, looking at the next several days action, that is my stop. That is my risk management area. Today's lows, this ranges lows, and that's what I would be paying attention to. I think the indices here are very much in play. So, the SPY, the Qs, you can trade the, the leverage ETFs if you want more juice out of this. Something like the SPXS, obviously, is the bearish one, and SPXL. I think there's a few other leveraged S&P 500 funds. But basically here, with the VIX volatility over 20 and lots of 1% plus days happening back and forth, this is going to be plenty of juice here to really express your trade and not even have to worry about sectors or individual stocks right now. So when volatility rises, when correlations go up, then indices become in play. This really applies to all the indices here. So the Qs, you can see again today, we're actually green right now in the Qs. So again, it was a horrible open this morning, retracing all of yesterday's intraday progress, but buyers once again just repeated the rally that we did yesterday. They essentially just did a redo here, and we're back up towards these highs. So again, it is constructive to see those buyers stepping in. The Russell is printing a nice hammer here, but still this is down almost 1%. So it's good to see that we again drove off of the lows here in the Russell, but this is still in a bit more of a dicey area because it just is, located much further and much more, compressed inside of this range. So that's the way I'm sort of framing things out. Dow Jones, you can see same exact thing, nice drive off of these lows. Keep things simple, pay attention to the lows from today. I think that'll make your life easier. Again, you don't have to trade every day. You can let this chop resolve itself, and if you are in that camp, you can easily throw on either a couple of simple downtrend lines from where this pullback started from, and you can also just use essentially breaking over 436 with some more conviction to really get out of this chop. I think if you start to see this S&P blow through 436, you're going to get a good amount of momentum surging in here as the trend line breaks, as these cluster of highs break, and as participants then look for this pullback to start moving to the upside. So those are the relevant levels. You can see actually on my left here, you can see on this bottom left watch list, these are IBD stocks, and these are our TR150 watch list stocks. So these are all like high powered, curated leadership type names. You can see how many stocks today are in the green pretty sharply right now. So even though it is tough out there from a market index perspective, you can see there are lots of different names that are working higher right now, seeing some big moves, closing strong, emerging out of some actionable areas and some pullback levels. So there are names out there. Take a look at, again, the link in the description of this video. You can check out our TR150 watch list, has all of these names that you're seeing us page through, and they are acting well and acting potentially as some leaders. So hopefully this is helpful. Just gives you a little bit of lay of the land here. Again, you don't have to trade every day. And if you want to be, bearish on this market, if you want to be taking shots to the downside, the script is basically flipped. It's just taking out these lows. I would want to be, pressing shorts or playing to the downside if we can start to break down through 427, where we have seen dip buyers step in 5, 6 days, 7 days, if you want to count back here. And it's just the opposite. If we start to see all of these people that stepped in suddenly taking losses, then that is where I'd want to be pressing on the downside. So that's the script is flipped there if you think that this market's going to continue or get a little more ugly throughout the rest of this month. So that's it. Hopefully a little bit more tactical, actionable on the major indices. Stay safe out there in terms of risk exposure, and don't forget position size. That is very important in this type of market. Cut those sizes if you are worried about the movement. So that's it for me. Thanks as always. Every Wednesday, trade ideas just like this. Subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here in the next video update.